Hello, and welcome to the M&A Science Podcast. This podcast is part of a mission to rethink how M&A is done. The old school seller-led approach, it's dead. Buyer-led M&A is all about strategy, alignment, and efficiency, putting value creation at the center of every deal. And let's be real, it's not just about closing the deal, it's about making it successful. We uncover what truly works in M&A by learning directly from the best. I'm your host, Kisan Patel, founder and CEO of Deal Room and chief scientist at M&A Science. Today, I'm joined by Sarah Hughes, head of corporate development and product partnerships at Atlassian, a global leader in collaboration and productivity software. Sarah has been at the forefront of Atlassian's M&A strategy for over 7 years, helping the company scale through strategic acquisitions, investments, and partnerships. Atlassian's traded on NASDAQ under TEAM. Today, we're going to explore Atlassian's approach to M&A, how they cultivate relationships with founders, what they've learned about aligning strategy, culture, and execution to make acquisitions successful. Sarah, how you doing today?
I'm doing great. Yeah.
Thanks for hosting me live here in San Francisco at awesome office.
Yeah. San Francisco or New York? What's your favorite one?
I got to be honest here, New York.
Oh yeah. Yeah. It's the best city in the world.
San Francisco, maybe we'll have rebound back and go back to the good days in the 90s era.
I find it's easier to be happy in San Francisco, but
you got good weather all year long.
It's pretty nice. But
then you got to find your right neighborhoods too. I think that's
true.
like the bottom line.
That is true. Yeah. It is very neighborhood dependent. So
and personality. I think people know I'm highly impatient. So that tends to be very well accepted in New York, where in California, not as much.
Not quite as much. Although, yeah, when I first moved to San Francisco, someone talked to me in the line at the grocery store, just as an aside. And I was like, what is your deal? What is your game? What are you playing at? And then I just realized that that's how people do it here. They're just friendly. So
so funny.
So now I'm one of those people.
There you go. Can we kick off a little bit about your background?
Yeah, sure. How far back do you want to go?
Quick rundown, and love to just get a sense of where M&A came in your life.
Yeah, perfect. Well, I actually had sort of a circuitous route to the M&A scene. I was thinking I was going to be a lawyer. So I went to Google to work on the legal team there as basically a paralegal sort of policy analyst. And, met a bunch of lawyers and decided not to go to law school. And as I was falling off that path, my boss at the time moved over to the corp dev team to head it up at Google. And I sort of followed him over there. He took a chance on me, even though I had zero skills, except maybe a can-do attitude. So I did strategy, corp dev strategy for about 4 years at Google, and then jumped ship to Atlassian about 7 years ago. So, yeah.
And all corp dev at Google?
All corp, yeah. So corp dev at Google is centralized. So yeah.
So that's the number one requirement is having a can-do attitude. I think
that's right. Honestly, I feel like it's sort of the best skill that you can adopt.
I've done enough of these interviews. People come from very diversified backgrounds. We've seen it all, even from engineering, legal, sales, marketing, come up through a function, end up in corp dev.
Yeah.
And they tend to perform or even outperform the traditional into IBPE background.
I do think it's really important to be kind of creative in the way that you approach problems. And there's so much that's going to get thrown at you over the course of a deal that you have to kind of do a lot on the fly. And so maybe that's why it lends itself more to kind of athletes in that way.
Can do. So Atlassian made a range of acquisitions, very diverse. I think we even talked about like Trello, then Loom. Trello, I'm a huge fan of. That was like big inspiration for when I early stages of developing Deal Room because it was just the simplicity. Great. So it was like my personal favorite project management tool. And then just reading about more recent acquisitions you did like Loom, which is a whole different segment. Yeah. What's the strategic thread that connects them? Like how do you decide the sort of view on the strategy, but then going through the exercise of build, partner, acquire?
Yeah, no, it's interesting. Atlassian's mission is to unleash the potential of every team. And so when you think about M&A through that kind of aperture, it's actually a pretty broad view that you get on the market and on our place in it. So in the case of Trello, it really was, it's a project management tool. It is focused on business teams, not on technical teams, which is where Atlassian historically was very strong. And so we saw it as a really good way to get project management, and collaboration into the hands of non-technical users. And then, users that didn't need the sort of complexity that a Jira offered, over time they might mature and need it. So we saw it as a top of funnel, but it really was focused on kind of the non-technical segment. And then in the case of Loom, this was actually a product that we were power users of internally and really believed in the vision. And particularly with COVID, when everything, became Zoom meetings, it was clear that there is a cohort of communication that you need to be doing on a regular basis that can't really be effectively captured in a 30-minute Zoom call, or it doesn't need to be, right? It's a waste of people's time. And so we saw asynchronous communication as the way to kind of bridge that gap into the future of work.
Which I guess fits well with like the project management. You have this really short text, and you want to add video in between having long form meetings.
Yeah, and we use it in M&A a lot for things like going over our financial models. We make a 5-minute Loom for our execs on the P&L that we're putting together and the financial model and valuation, because it just gives them a really good overview of what it is we're doing, what assumptions we're making. And I think that, we have situations like that across the business.
What are other deals? Give me your favorite deals or other examples of...
my favorite deals. I love all of my children.
I know. Let's
name, equally.
Let's name a few more off and get a sense of how they tie to strategy.
There were deals that felt just drop dead obvious to us. The Opsgenie deal was an example of that, where it's an incident management tool, very important to IT, very important to how teams function in the case of incidents. And so that fit right into our strategy, and also had a pretty good go-to-market machine that we were kind of spinning up with JSM, with Jira Service Management. So that was one that I really enjoyed working on. The Help, I don't know if you've heard of this company. It was a small company based in Boulder that did basically IT help desk for Slack. And it was an area we were looking to get into with Jira Service Management again. But the founder was really, really bright and just great to work with throughout the process. It was also at the beginning of COVID. So we basically got after our diligence meetings, we got the last flight back before everything shut down in 2020. So that was a fun one to do because it was just, operating in this new world.
And was that more for the technical capabilities of that product?
It was, but we kept the brand around because we thought it was actually growing pretty fast. And so we wanted to continue to help, keep the user base happy and growing.
Cool.
For a while. So do I have any other ones to... those are kind of like
the good examples.
Top of mind. Yeah.
One of the things that we talked about before is I was really intrigued about how closely you work with a product, but it wasn't so much of just we're trying to build our strategy by having conversations with a product. You're actually taking your efforts in sourcing and sort of help giving that information and market intel back in our product. Can we talk a little bit about that?
Yeah, I view M&A as kind of a push-pull where we are, since we have we have a really good perspective on the market because we spend all of our time in external focusing meetings, basically. And so thought leadership ends up being kind of one of the most important things that we do. So the three kind of strategic pillars that I generally think of when we look at our M&A strategy are, roadmap accelerants. So the team has its roadmap. How do we look at M&A targets that can just get us to market faster? And that's really kind of part and parcel with our corporate strategy as it exists today. The second is really areas where we're kind of, they're vacuums where we're not looking at things today, but have the potential to be really big in the future. They're not core today. They're kind of on the outskirts of what we care about, but in the future they will be core. And that's an area where my team really does a lot of work. We say, what does the future of this product look like? How are we going to get upended by things like AI? And then where do we need to play in order to in order to keep ourselves relevant? And so that's an area I think we do a lot of proactive research, and it's kind of a push. And then the third really is these kind of break glass targets. It's a list of large transformational opportunities that might not be actionable now, but that we need to build relationships with them. We need to understand how they would fit into our business. So if and when we have the opportunity in the future, we can transact. And so I see generally our external focus really lending a lot of value to those three pillars.
Accelerating roadmap, pretty straightforward for a very tech-oriented company. I like the vacuum, but it sounds like these are non-core segments that you're looking ahead and saying that segment got a lot of potential to grow and maybe we should think about getting into it. And then these larger transformation, I'm thinking these are like billion cap companies.
Yeah.
If our business was like deal rooms, like kind of project management-ish, finance focused, and for like much large player, that could be a transformational because it's something totally different.
Yeah, that's exactly right. Where we want to go into a new persona or ICP, I think it makes sense for us to buy a category leader. And that's how we think about it.
Then where's I guess I'm thinking of this relationship with the product team. Can you walk me through what's that like? You mentioned it's like push and pull.
Yeah, it's we align pretty closely with our product leaders. And so each year we sit down at the beginning of the fiscal year and we develop an inorganic growth strategy and roadmap across, I have M&A ventures and product partnerships. So it's sort of the build by partner. We work with them across that for the inorganic side of the world. And then we go execute against that. So we meet with them on a monthly basis to discuss what we're seeing, areas of risk that we're seeing, for the vacuums that we discussed, and or what targets are in market to execute against the kind of inorganic growth goals that we've set for ourselves. What was the? I lost the thread of my answer.
Yeah, with the push-pull relationship with product. You sort of mentioned how you're, I guess, like working with them on hey, here's kind of how we're thinking about this broader landscape. I guess I was. I guess we're just working with that team and kind of get an outline of like what that conversations look like. And I feel like there's intelligence you're getting both ways. It sounds like getting from the product team and then sort of feeding back to them as well.
Yeah, that's right. That is right. Because they'll see things and they will have an idea about where they want to go that doesn't totally align with necessarily how we view the world or the market segments. And so aligning that ends up being an interesting exercise and one that I think makes our corporate strategy better. So
it is. It's like a conversation of strategy where you're talking to the product leaders and saying, how do you see this world? Where do you see things going?
Yeah.
And then it may be different than your conversations in the top of the organization. But then you're sharing back with, hey, this is what we're seeing. This is where we're seeing the overall market. How do those conversations pan out?
I think they're really fun. I think there's a healthy tension between corp dev and some other elements of the org, including product and eng at times, because, often builders want to build, right? And so I'll come in and buyers want to buy. So I have a hammer and everything looks like a nail. Everything looks like an M&A nail. And so I often say, it's really important that we get to market faster and we should acquire in order to do that. And they'll say, actually, it's the integration headache is not worth it. We should build here. And I think that it just is like having an open line of communication there ends up helping everybody.
Firm Room, the world's most intuitive virtual data room, now with AI contract analysis. All right, at this point, I feel like everything in the world has AI in it. But let's talk about something important. Have you or your M&A team ever been blindsided by overcharges from one of those per-page billing virtual data rooms? It's 2025 and you'd think that scam would be extinct by now. If you're fed up with those outdated VDRs, check out Firm Room. There is no hidden fees, none of that 6-month minimum crap and then the price doubles after that. Absolutely no nonsense. Best part is you can check it out completely risk-free with a free 14-day trial, no credit card required. Visit firmroom.com and put it head to head with any VDR out there. Better tech for a better price. Here's to the deal.
I still think it's tough. I'm even finding we're a small company and I'm trying to like introduce M&A for like a first acquisition, and I get pushback from engineers. They want to build everything.
Yeah.
So there's just this whole like even partnering and so I guess how do you?
My view and again, I have a specific bias here because I'm an M&A person, but my view is that we pay for de-risked technology, and there is risk on the integration side, and so we have to be comfortable with that M&A at the end of the day is sort of a portfolio game. Like you're going to have some misses, and we should be okay with that and not too conservative in our approach. But building is hard too. Building takes time. It is risky. We don't understand all of these markets. Where we feel like we understand our persona and our customer base really, really well, and where something sits like at the platform level, it probably makes sense to build at the end of the day. But where we are, going after a user that doesn't sit in the same building as our ICP, there's a lot of market insight that we can get from going out and acquiring a company that has done this, that has the sort of blood, sweat, and tears of having gone through that and been in the market for years and years.
And this is what get the product leaders on board when you tell them that?
Sometimes, yeah.
Sometimes. Well, let me ask you this. You have M&A, partnerships, and venture all centralized, basically.
That's right.
Walk me through the reason why, and like how do you sort of base your interactions with a company with those three channels?
Yeah, it's not. It can get a little messy. So I'll be upfront about that. But inorganic strategy, we always end up doing the build, buy, partner analysis, and let's invest for things that are either should be good players in our ecosystem that we want to build integrations with us, or that we want to keep an eye on and stay close to the founders to understand more about the ecosystem that we play in, not things that are core. And so actually having that all sit on the same team has been really, really helpful as we think about top of funnel, because we're constantly meeting tons of companies and then bringing them to the team and saying, okay, is this, what do we think this is? Do we think this is a partnership? Should we just invest in them and let them be successful in the market? Should we actually not do anything here because it isn't useful for us, or the market is fine on its own? So I think actually having that inorganic internal debate all on the same, under the same roof is really helpful from an efficiency perspective.
So it sounds like it could either be, hey, we're just going to partner with them, test things out. And then sounds like partner and invest.
Yeah.
And then just acquisition.
Yeah.
How do you decide which way to go?
Which way to go? Yeah. Generally, it comes down to corporate strategy, or it comes down to product strategy. So at the end of the day, we have a roadmap. We want to be in a specific space. And if something is so core to our offering or to how users think about our products, our suite of products, we're going to need to own that probably. We won't be comfortable with the risk from partnering. Investment is an interesting one that I think kind of spans. We don't invest in companies that we think it's not a pipeline for M&A. However,
that's unusual.
Yeah, I think it's not the right, because if we are going to acquire a company long term, we should just get into that state of mind right now, rather than throw them some dollars, keep an eye on them there. I think partnership, or try before you buy, or just going after M&A ends up making more sense. This is sort of a strong opinion, maybe loosely held.
Yeah, well, I'm curious because I'm at Deal Room right now. We're 10 million ARR, and I'm exploring a minority recap. Whether we do in the near term, long term, just. Mm-hmm. And I've had some strategics approach, and I've talked to some bankers, and they're like, well, you're going to get this band, maybe like 8 to 10x from your typical PE players out there that focus on the software with the good growth.
Yeah.
But so these strategics are paying much higher, sometimes 12, 14, but big but. You're going to commit to a call.
Yeah.
And you're telling me that you're actually doing some of those venture deals and you don't put some strict terms of setting it up so you can acquire the business later?
We do. I never want to have egg on my face from not getting a call. So we do have a right of notice.
Okay.
In there. And it's not a perfectly formed set of heuristics on the investment side, because our strategy also changes. So we've been investors in some of these companies for 3 or 4 years, and sometimes we are actually moving more into their realm versus away from it. So I do want to. I do want to get the call always. I think we would get it anyway from our portfolio, and that's our goal, is to be providing enough value that we get that call. But we do want to contractually make sure that we get the call.
Okay, fair enough. But it's not like pure intent. It's just sort of, hey, there's this enough alignment that we believe in investing in it.
It would be very rare for us to do an investment and have as the rationale for that investment that we want to acquire them down the road.
Good to know. We'll have to talk more later.
Yeah.
What's let's talk about your approach to like taking this next. Is here's how it works internally, but externally, your approach for identifying and nurturing these opportunities.
Yeah, ChatGPT is making it much easier actually to identify opportunities in the market.
How so?
Well, I can ask it anything and it will come back with an entire landscape for me on anything we care about. I mean, we do start from the strategy. So we, again, to those 3 pillars I mentioned, we generally understand kind of where we're going as a business, what things the corp dev thinks we should focus on from a strategy lens to feed back to the business. And then we go and we make sure we understand every player in the market. Or that's the goal, right?
Yep.
So my goal is I never, ever want to see a company get acquired or see a company raise and not have known about them or taken a look or gotten a bite at the apple. And of course that, I'm constantly getting surprised by new companies that are out there, especially as AI is taking off. But that's really the goal. But it does start from our strategy. It's in spaces we care about that we do kind of those broad assessments.
And it's a market map exercise where AI has been helping with some of that.
Yeah.
Which is different. I was more around using AI for, and this is something I want to figure out how to do on scale, but strategic fit analysis.
Oh, yes.
Because there are so many of these tools that'll help you build a list of companies, but then you still got to do all the work for a strategic fit analysis. And like that's where I think AI could really help out if you can just have it more scripted. So it'll just run through them all and then stack rank them and give you a score.
Yeah, no, definitely. I think you have to really understand the set of heuristics there or be pretty prescriptive about that. But the last business case that we put up to our exec team, after writing it, we had ChatGPT write it. And it actually did an okay job on the strategic rationale. It was I was pretty impressed by how far it got us without necessarily needing to make tweaks. So first draft, it's good at first drafts.
So we start market mapping. We identify companies. How do you approach them?
We just reach out.
Because they heard of Atlassian and they're like, oh, sure, I'll talk to you.
Yeah, well, not always. I felt like in 2020, actually, it was really hard to get callbacks because everyone was growing so fast. They were really busy and they were like, why would I talk to you? I'll go raise $100 million and take $20 million off the table in secondary and I don't need M&A. But I think founders now are more pragmatic. And so the conversations with M&A teams have become much more of the norm. And also, a lot of times when I reach out, I'm not sure if it's an M&A conversation or it might be a partnership or it might be an investment. I just want to get to know them. And I think they're pretty amenable to that normally. We go through investors if we can't. We do warm intros. We have a pretty good network of people that know, or we sometimes have our product teams or leadership reach out for certain targets.
So prioritize trying to get an intro in.
Yeah.
Otherwise, you can use the logo with the cold outreach.
So yeah, sometimes, yeah.
And then how's those first conversations go?
They're generally pretty good, actually. We've come in, we've had our ChatGPT write us a one-pager on the business, so we come in not totally cold. I think that they have the most value when we bring our product team along, bring them along on the journey, because I think that when it comes to the conversations about potential M&A, it really is, you really have to sell a vision and you have to paint a better together story. And I want my product leaders to be doing that and to be kind of holding the bag on that, but also really bought into the vision. And doing that brainstorm with the company founder really also brings them along on the journey.
Can we go pick on the Loom example? Because I think there was an interesting story behind how that one sort of percolated and turned into a transaction.
Oh, yeah. I mean, maybe not like so interesting, Kisan, but...
Well, it was a one call and it's like, yes, I'll sell. Let's get this deal done. I'll send you a purchase agreement.
Yeah, no, that one was a slow burn. That was so the Loom case was I think my first call with the founding team was in 2018 or 2019. And this was one that was on our radar for a long time. As I said, we loved their product internally and we used it. Our execs used it for their company comms, daily updates, weekly updates, stuff like that. So we knew them pretty well from a product perspective. But our co-CEO, Scott, was a bit of a mentor to Joe over the years. So from, call it 2019 up until we acquired them, he would meet periodically with Joe.
That was last year, right? 2024?
When was it the end of 2023, I think?
Maybe the end of 23? Okay, let's say about 5 years.
Yeah. So it was several years of meeting, a couple times a year. So by the time we actually, they were actionable and we were ready to take the leap. We knew their business really, really well. We understood their culture. We felt like we had a good handle on their leadership team. And because of that, the diligence process was really smooth. We didn't feel like there were any surprises when it came to either the strategic rationale. Everyone kind of got it internally. And it was the conversations, I think, were much easier because of that.
Long game. You said you had one of your leadership team was basically having this mentorship relationship with the founder over there at Loom, just sharing notes, kind of helping out, being good.
Yeah.
And then that helped get to know the company as well over time. So you got to understand the culture, and then the strategic fit rationale is sort of it's been sort of conversated around the company enough that there's some validation there, which overall you think made the process smoother.
Yeah, I really do. And actually, that's one of the benefits of working for a founder-led company is I think that they are, they have a really good vision. They can talk with CEOs of these startups because they've been there. And so they're really good. I feel like they're a tool in the arsenal of M&A teams when we're looking at some of these more transformative deals.
Could you repeat that last part one more time?
I feel like the founders are a really good tool in the arsenal of M&A teams.
I think that's the point I was trying to get to. Why I wanted to hear that story was M&A just doesn't happen as a transaction. And I get it when you're in an auction process and everything's like time boxed to get the deal done quick as possible, basically. But when you look at the reality of like buyer-led M&A, it's more about getting the best outcome.
That's right.
And I think what you described is like that. It's just you're playing the long game. And if you play the long game, you're doing things at the right time. And I think it's something I'm learning too, because I'm building pipeline for our business. But then some of these companies, maybe they're in a little trouble and they want to do something short term. And there's some that they're not even thinking about selling, but you should still invest in building that relationship because you like the company, you see the potential there. And I think that's like something I'm personally learning. So when I hear it, because I obviously like Atlassian's got a good reputation as an acquirer. If we can look back at historical interviews we've done with Atlassian, there's a lot of good examples. And that's why I wanted to get a sense of that, of like, it's just your approach and cultivating those relationships and how you look at it as more of a long game versus this is a transactional, you're going to sell or not.
Yeah. I mean, in reality, I would love it to be a like slightly shorter game maybe than 6 years. But I think sometimes that's the way the cookie crumbles.
Do you get them where they're fast, where they're just hot and ready and it's just...
Yes. So I feel like almost I'm not doing my job well, though, if things are too fast, because starting from zero and getting to an approval from our executive team and our board, I think is hard in the span of 48 hours, unless we are already ready for that. And it's just a pulling the trigger exercise at that point. I think that's when it goes well. We actually did kind of a really quick and dirty analysis on a company that was coming to market a couple of weeks ago, and everything went extremely well. We were like, this is going to be fast. We need to make a decision by the end of the week. The product teams, everyone swarmed on it I was really proud of the way the organization swarmed on it, and we decided to pass. But it was hard. It's hard to get comfortable with a deal that's sort of in the call it $500 million plus if we're not kind of aware of and understand the business really well.
That's a really good point. In your pipeline, I track stuff where it's like, hey, this person is in the realm of selling for the right price.
Yeah.
which is everybody does that. Now there's these companies like the Loom example where years and years, it was something you're super interested in and liked the business, but it wasn't actionable. How do you view that in your pipeline? Is that just still in the pipeline or is it not? Is it just in the market map? Yeah.
It is. We put it into a monitor bucket.
Bucket.
And monitor generally means, all of these are fuzzy, right? But monitor is usually where we try to, again, develop a relationship with the company, whether it's the corp dev team, we meet them every couple of quarters, or the executive team or the product team. So we just keep an eye on them. We think through potential ways that we can work together. So when that time comes, we can actually be ready for it.
Okay, monitor bucket means once a quarter, we're going to be friendlies and check up with you and try to be helpful.
The reality is there are so many companies right now in our monitor bucket. We're not we don't check in with them all on a quarterly basis, but that's the goal.
Yeah, different tiers of monitor.
Yeah, exactly. Monitor hot, monitor cold.
Yeah, exactly. What's the biggest mistake M&A teams make when trying to convince founders to sell their company?
Oof. There are a lot. I would say one that I would call out, I think we talked about it a little bit, was I think, and I've done this in the past also, but I think that there's this, sometimes companies will kind of reach out and say, tell me everything about your business. Then they go away and then they come back and say, here's an offer. And then they go back and they say, okay, we're going to negotiate the definitive agreement and then we close and then here's the integration plan. And actually not bringing along the founders and the leadership team on that journey, I think is a huge mistake. And so I think what I've tried to start doing in meetings is early diligence. Our product leadership team also paints a vision about what our roadmap is. We can be pretty transparent on what we think, where we're headed and what we think the better together story is, and actually bring them into the conversation, because we've seen sometimes founders will be like, actually, I don't think that's going to work because of X, Y, and Z technical reason or market reason, or we tried this and here's how the market responded. And so have you thought about this? So making it more of a conversational, how can we build this narrative together, I think is a really good best practice that I've kind of learned and I'm trying to implement in every deal we do.
So keeping that founder along, and I'm trying to, so I always think in my head, there's like a diligence work stream and there's integration planning work stream.
Yeah.
And what you're describing kind of like teeters between the two.
That's
because
right.
It's, hey, what's the vision? Like, where are we trying to go? And you always prioritize where the value is around the diligence part. But then how are we going to actually make this happen where all of a sudden founders are pining on it saying, I don't think that's going to work.
Yeah.
So I guess, how do you view that in terms of
where it fits in the process?
Yeah, and even your process in general. Like, am I thinking of it the right way? Because the way I always look at it when I work with different corp dev teams is here's a work stream for diligence, here's a work stream for integration planning. It sounds like it's more intertwined the way you describe it.
I think so. It is. Well, it's sort of, I think of pre-term sheet. This exercise looks like, you have a management meeting, they present on what their business is, and then we do some presentation or some conversation back on why we're interested and what we're thinking about and where this business would potentially accrete value to our business. So that's kind of pre-term sheet. And I think as part of term sheet, we sit the founder down and walk through, here's why this is so valuable to us, and here's what you'd come in and do, and here's why, why we need you and the team. So we sort of try to sell the vision as part of the term sheet process. And then when we get into diligence, there's, yes, I would still bifurcate the two. I would say, we say, here are the 200 items that we need from you that are diligence items to check the box that we, in confirmatory diligence. And then here is the plan for integration and, help us, we set up sort of a 2-day workshop to walk through what the integration should look like. And that usually results in some sort of a vision doc that is co-authored by the CEO and our product sponsor. That is like, here's what we're doing. Here's what the first 90 days look like. Here's where the team fits in. Here's how we're going to integrate. Here's how we're going to get value in the first X months.
I like that.
So at least, things always change. Strategy always changes. Everything changes, probably day one after the deal anyway, but at least we have a starting point so that we can refer back to it and say, why did we do the deal and are we on track?
And that's something you just broadly communicate with the organization.
Yeah. And we used it. We used it pretty effectively in Loom. Actually, we had it. We circulated it to our exec team, to our board. They circulated it internally to their team. So everyone knew kind of, here are the metrics for success. Here's what we're reporting out on. Here's what we expect. And here's how we're integrating it.
Okay, so there's sort of the thesis on why we're doing this deal. There's a bit about how, I guess, with the
the why, the how, and the what. I guess what we're expecting to get out of it,
which would include
to keep us on track.
Some of the metrics.
Yeah, metrics. It's users, top line growth, et cetera.
And ultimately, this is your deliverable from what you described, starting with that early management presentation, pre-LOI.
Yeah.
Or, hey, we're getting to know the team. We're doing just some initial, is this going to be a good fit, working together. After drilling them with questions, then it's more, right, we want to share with you why this is going to be great together. And then you're working together to really clarify that vision to make sure that those executives are on board. Yeah. And then you bring them along in the diligence process where you really start shaping more, outside the 200 items for diligence. Yeah. Here's, let's talk through integration planning and really start refining what that initial, I guess, integration thesis, what would pan out to be.
Yeah.
Or I guess vision documents, things more what you use. And then it turns into that formal vision document that's sort of presented by your founder. And
yeah, that's generally the process. Again, all of these things are best practices, and sometimes things are moving fast, and we don't always get buttoned up on that. But that is the goal, and it makes them feel like, I think it is important for the leadership of the target company to feel like they have like co-authorship in that vision, rather than an acquisition being something that's just happening to them.
Bring them along, keep them engaged.
Yeah.
How do you think that expands with the broader team? Because again, I write a lot about buyer-led. I'm probably going to take quotes of this and put this in other content we have. And I've always felt Atlassian has been such a prime example of it. The fact I did a podcast where Christina was heading up integration.
Oh, yeah.
And it was with Scott. He was with one of the agile software platforms you acquired.
Was
it?
Yeah. What is his last name?
Oh, yeah, somebody's going to have to look this up.
Yeah.
He had both of them. So he had the CEO of an incoming company with your integration lead talking about how great integration went. I'm like, when does that ever happen? So just like referring on that, the fact that we can do a podcast and have, incoming CEO with your integration lead really talk about how the experience went and some of the lessons learned. To me, I think that was like such a unique and prime example of just taking lead as a buyer to really set things up for success. Well, that's part of the, just sort of reputation, being part of it, in terms of getting the engagement. But I guess it just sounds like what you just described is the reason why, is like, it's really thinking about how things are going to come together, that transparency, and then engaging with that. I mean, do you think that is really expands overall from that founder, leader, getting that level of engagement that after you close, it lends to the broader team sort of transitioning smoother? Because more times than not, like there's always a metric from a lot of companies of just how much employee churn that they're tracking. Yeah. And it just ends up being pretty significant and it's almost expected.
Yeah.
Where it's like really different than what you've cultivated over the years.
I think part of that, bringing the founder along on the journey helps with that a lot, because they've sold a vision to their team to get them to join their startup. And that vision is really, really good. And that's why people are excited about it. And so if they're excited about what they're going to do and what the company's going to do once they become part of Atlassian, for example, they will sell that vision again. And they'll be really instrumental on kind of keeping people around and keeping people motivated. I do think that attrition is it's a really hard thing, because some people just didn't want to sign up to work at a big company. And so actually just understanding that some churn is going to be there's going to be some breakage as part of this thing. And then how do we mitigate that, particularly if they're key employees, I think is our kind of plan B on that front.
So I think that's a really good way to put it. It's that, the sort of vision to join the startup, but now here's a vision of partnering together and being better together with Atlassian, that can the founder then sell that to the team. And that may not get 100% acceptance, but it's fine.
Yeah. Having them they have to feel an ownership stake in that, because when they own something, they are very, very good at bringing their team along.
The question is, how do you think about partnership and M&A as levers for ecosystem expansion rather than just feature expansion?
I think that partnership is really important there. And actually, ventures has been a big part of our ecosystem expansion strategy, particularly when it comes to marketplace and distributing through our marketplace, because part of the rationale for investing in companies is that they will actually distribute their products through our marketplace, which just is a nice virtuous cycle because it makes our customers happier. Adding more apps gets more people to build on our platform and for our tools. And so it just has a really nice network effect for the rest of the business.
Well, you have the answer right there. Like, I think that's what it is, hey, you do actually pull that lever when you're looking at those venture deals and saying, hey, this would actually grow our ecosystem, because if they grow, then the whole distribution grows.
No, that's right. And we don't want to own everything. We don't want to, there are so many areas that we could go, and we just have to be really careful about getting into every space. And so that's where our ecosystem really ends up impacting our overall strategy.
Okay, how about this? This is related. So Atlassian competes with and partners with giants like Microsoft. How do you navigate that tension when evaluating potential deals or partnerships?
Oh yeah, the co-opetition strategy. I think we understand that users are using a ton of different tools, and they're not going to just use Atlassian for everything that they need to do. And so they are going to be using, Google Docs and Excel and Copilot and other things like that. I think where it makes sense is where we can be bringing context from our tools to them wherever they sit. And that adds value to what they're doing. And then likewise, where we can bring context from other tools into Jira, into Confluence, into our system of tools. So it is really about adding customer value more so than trying to, win.
Do you think that's pretty accepted just in the industry of tech in terms of that view, or?
I think people it's a spectrum. I think we are probably on the more open end of that spectrum. But generally speaking, if you don't partner with the hyperscalers, I think at some level you're going to have a hard time.
What do you call it? Collaboration?
Co-opetition.
Co-opetition.
Yeah, like cooperation and competition.
Yeah. All right, I got it. Co-opetition.
I don't know if that's like an internal trademark that we have.
We talked about culture fit being critical to an acquisition success. What happens when culture alignment isn't there? Like, how do you mitigate that risk?
Yeah, it's tricky. Culture is this sort of amorphous concept that I think is really hard to define and really, really hard to diligence and measure. So it's something I constantly question, and I would love for AI to figure out a way to do it effectively, but I have not yet. So if anybody has, please email me.
There are some startups working on that.
There are some startups working on it. Yeah, you're right. So I'm like, they're pulling data for, like, the data sources are tough. But with that said, I think it is kind of the biggest risk of a deal in general, because people are the most important part of any transaction, at least the ones that we do, because so much of the value of the deals that we do is post-close, and it requires build-outs. And so the big risk there is that people will leave. If the cultures are not aligned, if there's sort of organ rejection from the rest of the company, people are going to leave, and we won't be able to get the value of the acquisition. I think, diligence is really important on that. We have to understand ways of working. We have to understand how sort of flat or not flat the organization is, what their talent management strategy is, what their comp philosophy is, because all of that plays into how we onboard them. But then we really do try to take sort of the best parts of their culture while assimilating them into Atlassian culture, because at the end of the day, they'll have to be. It will be more Atlassian culture than it will be their
there's this part where you anticipate on influencing their culture to be more like the core, broader Atlassian culture.
Generally speaking, yes. Yeah. So we fit them into the org chart. We, get them onto our performance cycles. A lot of the things that we do for sort of career development and, other things we institute kind of at close or shortly thereafter.
What's the worst? We're not name anybody, but what's like the worst case you've seen? Have you ever acquired a company they've like had anti-Atlassian culture or something? I don't know. Like, what's the worst case you've seen?
Usually those end up being kind of deal breakers, and they come out kind of pre-term sheet. So we haven't had a lot of cases that I would point out that where the culture is so misaligned, you know, where there's like a tops down mandate and it's very hierarchical or something like that. We have dealt with a lot of geos. And so different cultures different geos have different cultural elements and work in different ways. And so, you know, for example, during Opsgenie, we acquired an office in Ankara. It was the founder's Turkish. And so it is just a different culture, different things that the office cares about. And we had to, you know, kind of protect those while also being like, you're part of Atlassian now.
And then, so you don't have a terrible like worst case if there's a big, you know, hey, I get it early on, you do avoid it, but then sometimes it's just you don't know what you don't know till after close.
Yeah. No, that we've had a couple of cases in the past of founders not being a good fit or like leadership, you know, maybe not like founders, CEOs, but elements of the company leadership not being a good fit and attriting out pretty quickly. Which, you know, we are sort of protected. They don't get all of their like holdback or their retention. So we're actually not paying as much for the deal. But it is a bummer when that happens. Usually we are able to, you know, call that out as a risk before we close and come up with mitigation strategies around it. But that's kind of where I've seen it play out.
A lot of transparency. You guys still have everything, your term sheet published publicly?
We do, yeah. We do, and we haven't. It's honestly, I first was very skeptical about it, but it's been really, really good. It has helped our negotiating process a lot, surprisingly.
If you ever want to do a little session and review it, let me know. I did that with Chris Hecht a number of years ago.
Yeah,
and
Chris was one of the author of that. He pushed for that. So
yeah, you did. And I was like, well, you got to walk me through this because it's one thing to publish it, but I need the context. And he did that, so it's really good.
Oh, that's cool.
Atlassian's known for a clean, disciplined integration. What are the first 90 days post-close focused on? How do you balance speed with alignment?
Yeah, it's a really good question. And I think integration is the hardest thing that we do at Atlassian on the M&A side. It's very dependent on the type of deal we do, the strategy behind it, and then how we want to get value from it. But generally for one of the larger deals, it is sort of a first do no harm. So make sure that we're protecting the growth of the business, the customer base, making sure the employees don't have too much whiplash when they come in. And then it is, you know, get all of our back office systems integrated. We start that from day one. We want to get everyone on our commerce platform and on our identity stack so that we can start selling it. That's kind of thing too. And we can do that usually in the first 6 to 9 months. But that's a big platform lift. And then we want to make sure that we're aligned around actually pricing and packaging the deal so that we can cut customers over or introduce new bundles or whatever to get the value out of the deal.
To go to market. I heard your integration plan is just open for anybody to look at.
That is true. Is that not standard at a company? It depends. Obviously, like some of the HR elements are not open, but generally speaking, it kind of flows from that.
I haven't heard of companies that just put it there for anybody to look at.
So. Yeah, I mean, I think we're a pretty open company. We're pretty transparent internally. So
we wrote all these agile playbooks.
Yeah, we wrote, you know, our term sheet is out there on the open web, for example. I think it helps because people need to be brought along on the journey internally on our side and on the company's side. And so a lot of people have a lot of ideas about how we should integrate the business or that we've already been through and made decisions around. And so actually being able to put that into writing and be like, here's what we're doing, I think helps everyone get on the same page. So right. I don't see too many downsides to doing that. But I'm curious if you have any kind of horror stories that you've.
No, well, like I said, it's just you don't hear about it that often. There's usually walls everywhere. You mind if I ask some personal questions about how you do integration? I'm curious about the structure because I feel like there's so many ways to configure. Well, there's so many ways to configure corp dev in general. But how do you configure integration? Do you sort of run the typical IMO model? Is it completely separate in its own? Is it part of corporate development? Does it report into corporate development? Does it report out somewhere else? Like, what does that structure look like?
Yeah, it does report into corp dev. Oh, so we have kind of an IMO it's a small team. It's 2 people, and my entire team is about 15. So it's a pretty small element of it, and they're really the quarterbacks of the integration. But they're managing things. We actually use Jira for our integration.
I've actually seen the setup because I would compare notes because we build stuff in Deal Room, and it's at some point that's another little thing because we're always like we need to integrate this because we do all this stuff pre-LOI and
Yeah.
So.
Yeah, no, it's good. It's a good project management tool for us to use.
The way you have it set up, the way it's like, well, it's cool. I know it's hard to like visualize it, but it's nested in a way that you can put such a comprehensive plan and have it start off looking so simple, but then dig to every nuanced detail you want.
Right. Yeah. No, it is very useful. So those 2 people really kind of spearhead the integration, but we have cross-functional teams that are actually the DRIs for getting the work done. And then usually about after a year, we roll off and we roll into business as usual. For larger transactions, we will usually do kind of 3 years of reporting out to the board.
Is there an actual handoff that, hey, day 1 happens and it's the IMO that's in charge of integration, and then when you roll off, you're handing it off to the business unit and they're in charge? Is that what it looks like, or is it different?
I would say it's less formal than that because there are certain areas that we want to engage on longer term if there are hot spots that the team wants to keep an eye on. And some areas just get rolled into business as usual much faster. But we generally for a year have an integration meeting weekly with the kind of constituent stakeholders. And that is where people, that's led by the IMO.
And so they're managing it, but at the end of the day, like integration is tactically led in the business.
In the business, yeah.
So they're essentially guiding that whole work streams.
And I think that's kind of the right way to do it because I think you do need connectivity to corp dev because the integration leads really get involved early on so that they can understand where risks might lie and they need to be involved kind of in the process from the beginning. So I think you need them to continue to sit there and play that role. And then they have seen all of these. They have pattern recognition. They understand how to get things done in the business that, different teams might not. But at the end of the day, the teams need to own the outcomes because they are the ones who actually, own the product strategy.
Yes. I think that would be interesting. Maybe at some point comparing notes to the integration lead and just look at like the different configurations. Because I feel like when you even say IMO, people have a different perception of what that actually means.
Yeah, that's a good point too.
So that next podcast will break down the IMO. I got to talk about AI because obviously you're looking
What's
at
AI? No, I'm kidding.
It's good. These days, that is the actual question.
Yeah, that's a good point.
What are you buying? Is it just a sequence of prompts here? Is there some real technology?
Yeah.
What is AI? Big buzzword. And you already gave me some examples of how you're using AI on your deal process, which I think is pretty interesting. You're using it for market mapping. And then you also mentioned just some of the messaging or getting your prep for the outreach. You got a 1-pager built around that company. So you got some of these key points and you're really prepped to have that conversation with them.
Yeah.
Any other areas that you're using AI in the deal process?
Yeah, I've been using it a lot on the sourcing, like the sort of pre-term sheet diligence side, especially understanding market maps. So that's kind of thing 1 for me right now. We are doing a more comprehensive analysis of the diligence process itself. Particularly, there are so many ways that AI can actually help drive efficiencies in that process. And while we're moving really, really fast for deals, it ends up being useful for things like, going through 1,000 contracts and being like, here are the 5 terms that we care about that are red flags for us. Let's call them out. Let's figure out how we deal with them. That's just one example. So I think
contract review,
contract review. There's other stuff for, what else are we looking at? On the integration planning side, we're thinking through like make a first draft of things like employee comms, customer comms, that vision doc that I mentioned. So I think there are a lot of, even the integration plan, there are a lot of first draft areas that I think AI can be extremely useful. And then after the deal, we haven't thought quite as much about that because again, it gets federated into the product teams.
Well, they'll have their own ways of.
Yeah, exactly.
But the content drafting is definitely one. I mean, I do
Yeah.
that all the time.
Yeah.
These are really good examples. Where do you see things going? Like, how do you envision just the corp dev function changing or evolving the next 5 years?
I think it's going to be interesting. I think, when I talk to people, everybody's sort of in the camp that I am, where they're like, yeah, I'm finding it useful. I'm starting to see the value of it. It's still early days. But I actually think that in the future, it's going to be way easier to go through the kind of like confirmatory diligence process because it will be like, hey, like hook this thing up to your systems. We have this list of 200 items that we need for diligence. Go find them, return them, put them into a data room. You can check them,
give you your finding summary and
give you a finding summary. I think that a lot of that will
give me a mitigation plan.
Exactly. Knowing what you know about our organization, figure out the mitigation, figure out who should own it. I don't think we're at the point where like people would be comfortable just saying, then go do it. But maybe we'll get there.
Yeah, that's
5 years.
Maybe that's that 5 to 10 year mark. Then we'll run the execution.
Yeah,
those are fair. I'm really excited about it too. I mean, even our business, we're sort of doing a lot of experimentation in how to use AI in different parts of diligence.
Yeah,
I am curious about when going back to your core corp dev function. How do you look at AI just impacting that? And I'm particularly curious. Is it, hey, we're acknowledging every company slapping AI into their product in some shape or form, and we just try to understand what that actually means, if it's really a game changer or not, on one side. The other side is, do you have like another, almost like a work stream or market map just around AI products alone that you're starting to look at? Now you got to expand that market map with just all this ecosystem of AI products that maybe are just AI first, entering and disrupting?
Yeah, I think, so your first question was around how it will impact corp dev teams and departments, right?
Well, which is more like, how do you look at the landscape? Because like I said, it's hard because the challenge I have is everybody's saying AI. Like every landing page right now is AI. So I look at it as like, okay, there's all these products that are now adding AI, and then it's getting a sense of like, what does that actually mean? And then there's this ecosystem of the new products that are coming in as AI first.
Yeah.
And that's where I was curious of, how do you sort of look at that whole ecosystem? Are you bucketing those new tools under the same market map, or do you create a new market map for all these emerging AI tools?
It's more around the job to be done. So I think it is sort of like, what does the future of the software development lifecycle look like? Jira is a huge part of it today. What are the ways that the SDLC is going to be upended in the future, and what are things we need to buy into? Who's doing that now? Where do we think they're headed? Where is this going to end up? So it's looking around corners for each of our kind of collections that we offer, and seeing, what the future of those collections looks like. So I think that that's how we do market maps based on that. I would say now there's no market map that doesn't have 90% AI companies that we're doing today for any of the spaces that we're engaged in.
And I like that framing, the jobs to be done, because then you stay true to looking at the ICPs and what is the actual solution delivering for them.
Yeah, that's exactly right.
What's one lesson you learned the hard way when a deal didn't play out as expected?
Oof. There have been deals that I've done in the past that have felt too confrontational, like an us versus them mentality. And I definitely was part of that issue. And I think that the lesson that I learned from, I'm thinking of one or two deals where it just felt like the founders were really emotional. They were really angry by the end of the process. And I was really annoyed with them because I couldn't see why they were being so angry and emotional. And I think what I learned from that is that it's really important to just treat founders like your teammates, because at the end of the day, they're going to be your teammates after the deal closes. That's one of the great things about working in M&A, and instead of working in like iBanking or something like that, like you actually follow the deal through and you get to work with these people. And so it's really, I think, important from the get-go to set up the deal like, hey, this is a challenge that we are facing together. This is like, we are on a crew team. We're not in a boxing ring kind of mentality.
Right.
And I think I could have done more in the past to set that up just from the get-go and then treat the deal that way.
That, hey, we're going to be like getting married and going to be partners together.
Yeah, exactly. Exactly. It's like a marriage.
Yeah. So we can't have the us versus them.
Right. So there will be challenging conversations. There are going to be things we disagree on, but we have to remember at the end of the day, we're on the same team rather than on opposing teams.
That's a good one. It's easy to forget that. And I've been reminded, our good friend Chris Hecht I was talking to was reminding me of like just putting yourself in the other person's shoes when negotiating these deals. I think that's a big part of it too. And those are like easy things to forget because you're just in your day-to-day mindset.
No, that's right. Yeah. And we've seen hundreds of these, right? But a founder generally has seen, it could be their first M&A deal or the time, their first time being acquired or their second. Like they're not going through, tens of these in their lifetimes probably. And so it's a lot scarier for them. So I think as M&A people, we should always remember that.
That's true. I'm kind of rethinking some of the situations where I shied away from a deal, but I felt like it was feeling too transactional, where I wanted it to be more meaningful, to have assurance that if we got a deal done, it was going to go smooth. But it wasn't. It was just too much of give me the price. I want to know the terms, and but that's a tough one. I think.
I think transparency is really important to deal with that. So.
That's why this isn't easy.
I know.
Any other big lessons you've learned that have changed how you approach M&A today?
I think we've probably covered the main ones. I mean, lots and lots of micro lessons. I learned them in every deal. But
well, once that AI bot gets activated, that gets all your historical emails, Slack messages, right. I'll make sure just to put a prompt, give me all the lessons.
Yeah, I could just ask it what my lessons are. Yeah.
Give me a list, and then I'll have AI just read it off. I don't have to do it myself. I can just.
That's right. Our jobs, we actually don't even need to be sitting here.
And we could have just the two AIs, so they could just have a conversation on that list with each other.
It would probably be really, really fun.
You ever played with Notebook LM?
Yeah, just very not a ton, because we actually don't support it internally for our work stuff. So it's only been in my so
you do the personal.
Time, yeah.
I put 100 podcast interview transcripts in there, and it's just the whole conversation thing it does with AI is such a trip.
It's so wild. Yeah.
It is. It was good and impressive, but you could when you put that much data in, and I think that's the struggle right now is you put that much, it gets things off. It was like misquoting the wrong person. Cause I know so-and-so didn't say that. It was somebody. So it's, but it was pretty interesting where things are going. Any cool advice you'd give M&A teams looking to build better deal flow or execute more successful deals?
Ooh,
all
advice.
Your peers in Silicon Valley are listening.
I would say, send all of your good companies to Atlassian. I think the advice I have is to really build your network. I think I've relied a lot on my network of VC friends, bankers, even, I can't believe I'm saying that, for really good insights on the market. So crowdsource a lot of things. I think the second one would be relentlessly drive internal alignment. Internal alignment is really hard to get to, but I think focusing on that is a good way to trust build internally. And then the third one, do I have a third? I think have a perspective. I think corp dev people having an outside-in perspective on a market and a business is a really important kind of data point for product teams as they're making decisions rather than just being execution engines of deals.
These sound like areas to be very proactive in that make you successful and other corp dev leaders, but the networking piece, that's like being proactive about finding the opportunities, the relationship part, get ahead of those. Yeah. The internal alignment, I think it often gets forgot about because that can take up a lot of time and effort, but being as proactive on internal alignment. And then that third area of that perspective, because I like how you framed it that way of you're basically bringing that outside in perspective, which could open up some eyes for some folks internally.
One of the deals that I heard about in, but I don't have firsthand knowledge, but one of the deals I heard about was this founder who, got acquired, made something like $50 million or something. in the deal, but it was all in retention and just bounced and went to his house on the Cape and never showed up to work again. And they had a really hard time firing him because he had a lot of protections around his equity payouts. So, we have a lot more structure in place around people showing up for work.
So he had their attention, but he just was pretty loose and kind of got away without doing anything.
Yeah.
Oh, wow. Good to know. That's pretty crazy.
But nothing totally insane.
So this has been a great conversation.
This has been fun.
I learned a lot. You've helped me become a better M&A scientist. Those of you still listening, you are also a fellow M&A scientist. I value and appreciate you getting through this far on this content. I love to hear feedback. Let me know what you think of this interview. If you got any other ideas, topics, suggestions, reach out to me on LinkedIn. I'll take the criticism as well. That's how I get better at this. Till next time, here's to the deal.